Welcome to the Krinzman Property Playbook, where we dive deep into the heart of South Florida's real estate scene. I'm your host, Matthew Krinzman, here to guide you through the strategies, insights, and community connections that make buying and selling real estate a science. If you're looking to move beyond the basics, build trusted relationships, and grow your understanding of this competitive market, you're in the right place. Every episode, I'll be bringing on local pros, from attorneys to contractors, to give you the inside scoop on what it really takes to succeed in real estate. So whether you're an investor, buyer, or just curious about the market, let's kick things off and get you one step closer to your real estate goals. Welcome to the Playbook. Hey, well, good afternoon, good morning, good evening, whatever time you're watching this or listening to this on your favorite internet podcasting sites. My name is Matthew Krinzman. I am the host of the Krinzman Property Playbook. I am a broker associate here in South Florida with One Sotheby's International Realty, and I've been at it for a very long time, 20 plus years. And welcome to my podcast. Today we have Aaron Letzeiser, who is the co-founder and CEO of Obie, which is a venture-backed insurance and risk management technology platform. Is it to sell insurance or quote insurance? What is it exactly, Aaron? And tell us a little bit about yourself while you get into it.
Sure. Yeah, absolutely. Well, thanks, Matt, for having me today. Yeah, Obie is an insurance distribution platform specifically for small to medium-sized residential real estate investors in all 50 states. Obviously, the Southeast and Florida in particular is a big market for us. That's been a hotbed, real estate investment activity really over the last decade. As the market has continued to heat up, I think Florida is probably still the hottest real estate investor market in the country. But really, Obie really came about 10 years ago. Myself and my brother, our backgrounds were real estate, private equity, knew enough about the insurance space to know that buying insurance as a real estate investor, especially in the Florida, Georgia, Texas markets that we were really operating in, was frankly just a massive headache, and one of those things that nobody really pays attention to or
until
looks
closing.
at until closing, right? And we said, there had to be a little bit of a better way. It felt like it was a weird part of the insurance market where it wasn't insurance for large apartments where you get all this excitement over this, six-figure premium. And that's where your really large brokerages spend a lot of their time. And so we were left with your local independent shops. And there's nothing wrong with that, but their markets are very much personal lines focused. And so
very true.
They offered landlord insurance and landlord coverage, but it just, it's called the accommodation product in the space. They're accommodating you because they don't want you to go to the State Farm or go to the Allstate or find somebody else to be able to do this.
Yeah, they want to keep the book.
They want to keep the book, and so that's really how Obie was born. We wanted to figure out a way of being able to provide for this market really easy to access and really easy to understand insurance products, specifically tailored and built for real estate investors. We didn't need a lot of the fluff that was driving premium costs inside of homeowners insurance products that have just kind of been tailored towards a landlord or a real estate investor. How can we build a product that was specific for those markets? And then how could we embed them directly inside of any place for those owners and those buyers, any place that they're buying, selling, or managing the transaction of a real estate investment asset? So we embedded our insurance purchase experience inside of the loan closing process or inside of your property management software, really trying to make it easy for these folks to be able to utilize information they've already used with their existing service provider to make this process feel a little less painful than it normally is.
So you saw a pain point and you created a solution for it.
Not naively. We didn't know anything about insurance when we first got into it. We were on the buyer side of it, but spent a lot of time getting smart and hiring the right people to be able to understand this market and figure out how could we build a profitable insurance product that could continue to maintain a presence in Florida or in Texas or in California, some of these difficult markets, by utilizing and decreasing our own costs by putting it inside of experiences that your listeners are probably utilizing on a day-to-day basis already.
Yeah. So I guess we can get into this a little bit more, but are you acting as a broker for insurance, or are you actually an insurance, are you actually an insurance company?
Yeah, we're writing and underwriting the insurance products. We have an agency arm, so in the event that we can't service those things, but about 90 to 95% of the stuff that we do today is on programs that we're underwriting internally ourselves. Alongside with fronting and reinsurance partners that we have to be able to service all 50 states. So, we wanted to build, as landlords and as investors ourselves, we wanted to build a product that we felt met the needs of what we cared about on a day-to-day basis. What were the things that we knew that, as a landlord, our tenants might end up causing some damage to the property, or something might end
Sure.
up happening.
Yeah.
You've got those water backup issues or loss of rent coverage, right? Things
Oh
that
yeah, that's a good topic.
normally,
Yeah.
normally wouldn't come up inside of your homeowner's
No.
policy, right? That was just, it gave you a landlord endorsement. It allowed you to extend coverage to a rental property, but didn't really feel like it was addressing those needs. Whereas a lot of those products, when we were buying this insurance, they'd have a lot of contents coverage, personal property coverage, right? We're like, I'm paying for coverage that I also don't need, right? As an investor, I'm not furnishing these apartments.
Right.
And so how are we able to build that product? And that's the product we offer today.
Interesting. So you actually are the insurance company at the end of the day. You're the insurer.
Yeah, effectively. Yeah, there's a
Yeah.
couple of tranches there. We utilize fronting and reinsurance
Okay.
to be able to offer that, but we are the person that's offering this coverage.
Very interesting. That's interesting. So so just out of curiosity, how many policies do you actively hold at Obie?
Yeah, we're tens of thousands at this point. I think we're up to
Wow.
about 35 to 40 billion, if not more, in property value that we cover. Again, primarily in,
Wow.
diversely held across all 50 states, but certainly those concentrations in areas that real estate investors are quite interested in these days.
Right. I mean, look, based on my own personal experience, being in the business for a very long time, and as a real estate agent, and sometime investor, but mostly in the real estate agent, when I get, when the buyers are in contract or they're buying the properties, and insurance, like you just said, like we said a little earlier, was that sometimes they wait till the day before closing to think about, oh my God, I need insurance. When in reality, you should be thinking about day one. When you go under contract right away, that's something you should be, as soon as you get the inspection report, really is the time you should be already pricing it out, or going to someone like yourself or another, an insurance broker or an agent locally or wherever, to have them start putting it through underwriting, so you understand what you're going to be paying, because it could blow up a deal right before closing.
You're absolutely right. When we went out and surveyed most of the large single-family rental lenders across the country, about 8 to 12% of loans get delayed at the closing table because
100%.
the insurance is wrong.
Yeah.
Right. And for whatever reason, everybody's closing at Friday at 3 p.m. Right. It's a Friday today.
Don't close on Fridays, by the way. Never close on a Friday.
Never close on Fridays. Right.
Worst day. And Mondays too.
Close in the morning. Right. Like get a 9 a.m. closing, because it's Friday at 11:15 on the East Coast right now, and
good luck.
It's probably beautiful in South Florida today.
It's quite nice, actually. I'm looking out my window. It's actually, yeah.
If your agent, you're closing at 3:00, you get halfway through closing and somebody says, all right, let me see the insurance. Let me see the declarations page. Let me see the coverage. And you're like, well, here it is. And they look at it and they say, well,
coverage
didn't you look at page, enough. Yeah, didn't you look at page 312 of our loan document? Right? You got $300,000 in general liability coverage, not the 500 or not the million, right? And so you want to make sure that, even your agent who might be available, they still have to go out to the underwriter, right, at that insurance carrier in order to be able to make that change. Yeah. It's difficult, right? Like it's unnecessarily stressful. And
but also it could also ruin if you're financing your debt to income ratios too. Because look, and God bless mortgage brokers and the lenders, when they put up that preliminary HUD or whatever to give you a preliminary statement, like, hey, this is what's going to cost you, based on the mortgage, your purchase price, and the insurance. For some reason, they really underestimate insurance badly. I mean, I've seen something like, I haven't seen it recently, but in years, I'm like, $1,000? Where are they getting $1,000 for homeowners insurance in South Florida on the water? Come on. Even if it's a condo, you're not going to pay $1,000. It's going to be paying more. And then they're like, why? It's so that you want to get these things kind of situated as soon as you get the contract, really. Like I said, inspection period. And that's a critical thing. And that's actually, to a credit to a good insurance broker, insurance agent, taught me that many years ago. He came to the relationship I had with him, he was like, look, when you're in an inspection period, and as soon as you have like a 4-point or the 4-point inspection and the wind mitigation inspection, which are two main inspection reports that insurance needs here in South Florida, depending on the age of the building or the unit or the house. So he says, give it to me right away. Just send an email to me. Let me take a look at it. Let me tell you what I think. And let me put it to underwriting, because and I'll get you a fair quote, get you within a range. because again, hey, I'll have you different types of quotes for you or for the buyer. So that way they can make an informed decision. Is it worth to go through the deal? Because, that insurance is not 1,000, it's 5,000 a year, if not more sometimes.
And this has come up more and more in probably the last 2 to 3 years, especially for the Florida market, but it's starting to really impact the rest of the country. You don't know what is actually behind that insurance line item, right? So even when you're getting that pro forma from the broker, maybe you're getting an offering memorandum on the property, you're seeing what the trailing 12-month insurance costs are, and then what they also expect pro forma prices are to be in the future. But again, you don't know what's really behind that. And so what I would suggest is really two things. And on top of what you mentioned, which is get the insurance started immediately. If your listeners are primarily in Florida, everybody's familiar with that 4-point win mitt. It is the thing that is going to be able to support your case to get the most affordable insurance that you can get in order to meet the expected, cash flow and cash on cash return that you're hoping to get from your investment property. So the quicker that you can get that process started, the better off you're going to be. But what I would tell you as well is that when you're looking at those, the trailing 12-month historicals on insurance, you have no idea what's behind that, right? They could have the wrong insurance on the property. They could be severely
underinsured.
There are also instances where if you're buying an existing rental property, you don't know what's also behind that. It could be an entity that's owned by Blackstone, right? Or owned by American Homes for Rent or someone else, where to their credit, they have 40,000 homes. And so if that's the case, they're operating their insurance in a vastly different way than you and I are. And so when they're breaking down their total insurance costs across those 40,000 assets, it might come out to $1,500. It might come out to $1,200.
Right, because they're spreading it out. Yeah,
they're spreading it out. Their insurance part of that. And so to your point, you really don't want to go hard on cash and go into that LOI without knowing what that's going to be. And a really good insurance agent, especially in some of these volatile insurance markets like a Florida or like a Texas or Louisiana, coastal Georgia, or the Carolinas, they're going to have a really good sense on what that looks like. And so just as, many of your listeners that are investors or even as real estate agents and realtors, finding a really good trusted insurance agent to be able to gut check those numbers against, they're going to give you a pretty good idea within probably, 70 to 80% accuracy. If that's a fairy tale number, or where directionally it's going to come out, because you really don't want to go hard on cash and then find out not only was that insurance number inaccurate, but also this property really should have had flood coverage and they haven't had it. Right. And that's the uncovered stone that I think really kills deals recently.
Yeah. When you pull the FEMA map up, or what your X or AE zones are and things like that. Here, the map changes quite a bit, actually, and I've actually seen at a sale, which was really amazing. Just as a side, there was a property in Miami, a fourplex, and the flood zone went right through the property. And that was, you see that in the maps, like where I live too, where I go my own home, like the flood zone is like 1 block away, and it's not a flood zone, but it's just interesting to see how those maps are drawn. And you're like, wait a second, do I actually need flood insurance since half my property is in the flood zone? I'm like, yeah, your whole property now needs it. The insurance, no one's going to give you an exception on that. Unless you can show, like, look, my property is above the line. It really is. It's built up. I have a floodplain here or whatever. I'm above it. But it's not easy. But flood insurance is something people a lot of times do forget. But again, like you're saying, it comes down to having a really good, experienced insurance agent or insurance broker on your side that you deal with as an investor or as a real estate broker. You want those people. So as your company, do you guys work with other insurance brokers or agents? Or how? Okay, so you do. You broker out the deal.
Absolutely. I mean, I'm a big believer that insurance agents and insurance brokers are going to continue to exist.
I think they have to.
Yeah. Especially in certain markets and certain pockets, there's insurance out there. You're buying renter's insurance, you're buying pet insurance, right? Like those are opportunities that you can go through that true online experience. And you can, we certainly have people that come directly to us and buy insurance. I believe that there's a place for the agent in that experience. And so we offer them the ability to get appointed with Obie and be able to offer our products and services, the risk mapping that we do. We offer that out to independent agents across the country. That way they can take advantage of that.
So they go onto your platform and they sign. Is it when they sign up with you? Is that how it works?
Correct. Yeah, they sign up, whether it's a partner, if it's a mortgage bank, it's, if it's a property management company, if it's an independent insurance agent, we provide those services. And then also even out to some of the other carrier markets where their own agents haven't been able to get this type of product from those carriers. But ultimately, the carrier does want to offer this line of business. And so our goal at the end of the day is to figure out how we can continue to better serve the real estate investor community in a way that's going to be meaningful and easy and streamlined for them.
Right.
I think that's the biggest challenge with insurance, is that it is very complex, it's nuanced, it can be very convoluted. And so how do we allow agents to be able to better leverage technology with and alongside their clients so that their clients can be involved in that purchasing experience? They get to make, and this is something that I missed as a real estate agent or as a real estate investor. I never really truly understood, and I couldn't blame my agent for it because of how manual it was. I wanted to know those different options. I wanted to know the different levers. I'm buying this property in Tallahassee or in Panama City or in Fort Lauderdale or wherever that might be. I want to know what the delta in premium is going to be if I go with $1,000 deductible or $5,000 or $10,000, maybe $25,000, right? Depending on my portfolio size. But that poor agent, as I think back 8, 10 years ago, they'd have to go back to the carrier every time for those, right? And they have to be pulling all of those. That's a terrible experience for them, right? Nobody should expect their agent to be doing that because of how time consuming that is. And so we wanted to be able to put that experience directly in the hands of agents as well as their owners and their clients. So that way they could sit there, they could play around with the different variables. Do I want to get water backup coverage? Do I want to get flood? Do I want to hire a lower deductible? Because at the end of the day, insurance gets a bad rap because when you have a claim and that claim gets denied maybe, or you get less than what you thought it was, you didn't feel like you were you didn't feel like you were the master of your own destiny, right? Like you didn't feel like you were able to kind of captain that ship and that purchase experience. So that's what we wanted to be able to do. We wanted to be able to empower real estate investors where we knew that the bottom line price for insurance was going to make a material impact on their P&L, and how could they make the most informed and educated decision about their asset for themselves. Maybe they really needed to optimize for cash flow this year. So they're going to take the risk, right? They're going to go up to a $10,000 deductible, and God forbid they got a water backup issue and something happens, it's $5,000 in damage, and they get to turn to themselves, unfortunately, and say, well, yeah, I made that decision. I went with the higher deductible this year. Right. But maybe they're actually, in an appreciation in period, and they're okay with paying a little bit more to get $1,000 deductible. We wanted to be able to empower real estate investors to be able to do that, because unlike homeowners insurance, where, there's an intrinsic value of the home that you're living in and the place that, you and your family might be, there's a bit of a different nuance and variable that comes in with this business effectively that you're running as a real estate investor.
Yeah, because you obviously, it's an expense. It's a fixed expense, at least for the year. So you want to maximize your revenue as much as possible. You want to get a good net. So, and insurance does eat up a huge chunk of one's revenue, on a yearly basis. So it makes sense what you're saying. Yeah, I'll go with a $10,000 deductible, or I'll raise my limits or whatever rates to get the rate down so I can actually increase my bottom line. And look, deals get blown up here because of the rate of insurance, and it kills cap rates. It kills other than, property insurance was obviously a big topic here, but the property insurance part of it on the investors blows up deals all the time because it gets so expensive. And like you said, it's like if they have a way to look, work these numbers beforehand, and then say, okay, if I adjust this, okay, now my rate, my premium is this, without having to constantly go back, having your mate, well, hey, hey, Jim, let's just, instead of the 10,000, let's try 20,000. Okay. Then he goes back. You kind of want to do it all at once rather than kind of just keep on going back and forth. You want everything to see everything on a chart right away, I guess, want to see it, visualize it quicker.
Yeah. And listen, we now live in an era where people have grown up with an iPhone and have an expectation of technology and immediacy. And so as people are evaluating deals, we can give a down to the penny, price on what insurance is going to cost, right? Like this will take 30, 40, 50 seconds, throw in the address, answer a couple of questions, either you or your agent. And so as you're evaluating those deals, I can give you the actual price of what this is going to end up being. And so from that perspective, we wanted to put the power back in the hands of the consumer. So people felt very informed going hard on cash and deals to be able to make sure that deal and that property is going to cash flow in a way that you expected.
So you would say that what Obie offers on that aspect of getting for pricing insurance, looking at what the costs are, that differentiates you from from your competitors who are in this space now as well?
Yeah, speed and transparency. Those are the two biggest things. It's written on the wall here at the office.
Speed and
Those
transparency.
are
I like that.
the two biggest things, right? It's nothing against the existing insurance carrier market that exists, but the technology is still so dated that, as a real estate investor, even as a homeowner, right? Like, you're submitting information out to an agent. That agent has to reformat that, and then they're individually going out to each one of these carriers and sending an email or sending in a spreadsheet and a PDF of data, right? We wanted to force the industry to move forward a little bit in this space, and this is the best way to be able to do that. At the end of the day, someone on the opposite side of the receiving end of getting all of that information is just rekeying that into their underwriting models. So why couldn't we build a technology platform that would automate a lot of that work, right? Let's take in the data points and the variables and be able to generate the exact same quote that an underwriter manually quoting this stuff out would do as well.
Yeah, I think what you're talking about, the pain point of the insurance, and how it takes longer, the manual input of everything. It's real estate itself, even on the sales side, on the brokering side, is we're still kind of like old school, but we're trying to catch up and adapt and use more technology. And it's just, I think real estate's a behemoth. It's like that aircraft carrier out in the middle of the ocean, and it takes so long for it to turn. That's where I think you're seeing in real estate, just on all levels, is that it's turning. It's been slow, but it seems now that there's, at least in my experience, I've been in this like 26 years. So I started off with quarters in my pockets so that I could use a payphone and a book for MLS, and the MLS was a DOS-based program, which everyone look up DOS-based. And it was a green and black screen on the, it was a CRT or whatever it was called. This, the old, and we had no pictures, things like that. But I see now maybe it's starting to speed up a little bit more. I think the acceleration of changing is starting to, I think, catch up with the technology. And I don't know if AI is a component of that. Yeah, at least I've started seeing in our business, AI is starting to be more of like taking things off my plate and things I normally would have done. Now AI is helping me do. Are you doing that as well, or is that you still, is AI not as a tool yet?
It's certainly becoming a component and a piece, right? I don't think it's ever going to truly replace some of the work that has to be done. But at the end of the day, from an insurance perspective, insurance is really just numbers into a formula, right? And I hate to drill it down into something that simple. It certainly is not. The tables that actuaries build in order to be able to do this and take into account all of the different variables that could hit a state like Florida or any other here in the US. But at the end of the day, if you can start to combine a like human level analysis with an AI's ability to consolidate that data and analyze that data in a really quick way to be able to present that in an actionable format, I think that's what's going to be very interesting inside the insurance space, right? To start being able to analyze very large data sets to be able to make quicker and quicker decisions. That's where that's going to come up, right? The biggest thing in insurance is, what are the top variables that could cause a loss? And of the things that are going to be uncontrollable, hurricane and wind risk in Florida being one of them.
Yeah.
How do you decrease the concentration of some of that, right? How do you utilize potentially AI to look and say, hey, I can't have X number of properties in a certain zip code, right? Or in a certain quarter mile of area. The way that insurance is viable in the US is a spread of risk, right? You don't want to ultimately insure every single property in Miami Beach.
No.
Right?
You'll be in
bad
trouble.
Idea. Yeah. You want to insure maybe one every half a mile, right? Or one every several blocks. You want to obviously, balance that with stuff that's inland. And so as those models continue to evolve and mature, I think there's opportunities for AI to come in and really start to optimize that process. What I'm really interested in, though, is how can you start taking some of these disparate variables that your listeners as real estate investors or realtors might be sitting there to be able to better understand and evaluate the deals for potential investment properties. And so how can you start to take a multitude of different variables, right, and run those models? How can you run 100 different models to say, hey, listen, What if the leasing market actually isn't as quick? What if I have a couple weeks of extra vacancy that I don't actually think, I'm going to have? What if the rental market actually decreases by 5 to 10%?
Sure.
You can start taking, as large language models start eating up all of the data around the country that's available online, you can start doing a little bit more instant analysis and more robust analysis to say, where's the rental market trending? Where are rents
Right.
trending in
Right.
certain zip codes or certain census blocks? And so how do we combine that and say, this is the property that I'm looking at based on this data, take into consideration, variable changes and potentially rate volatility, where the market's at, insurance costs, flood costs, closing costs, right? Which one of these, should we start looking at?
Yeah, I
And
guess. Yeah, that's very cool.
and that starts to build you, I think, your case around how you stack rank some of those deals, right? What do you start looking at first based on some of those variables? So that's what I'm going to be very interested in the future.
Yeah, I mean, that would save a lot of time, if you could just, like, as an investor, or as like any of us really in the real estate, that's involved in real estate, if you can just know what everything is going to, like, not know, but at least have that knowledge base going in when you're researching a neighborhood or an area for investment potential or properties. And like, okay, rather than having to get into the contract and be tied up in the due diligence, whatever it is, for, if it's a multifamily or a retail, you're in there for 30 days on due diligence, maybe a little bit longer, and you can cut that time down for, or even before you get into it, like having those variables already, knowing those variables going in, probably makes you a smarter investor. Probably really helps you on the pricing, as far
Yep.
as you have that data out there and you have that analysis, and then you factor in insurance costs and everything. So you're really coming in a well-armed investor at that point, or a real estate broker or an insurance broker, whatever it may be, knowing those things. Like, hey, these are all things that would help. It would help me as a real estate broker and agent with my clients and my customers, buying or selling. Is here, this is it. And which I've been myself, and I know a lot of other agents and realtors are using AI for those things. They're starting to plug in those things to get that market analysis or knowledge base, and which was difficult at times, because you had to go to MLS, go to other places and find that information. And like you guys,
Sure.
you have your insurance,
Yep.
Spreading the risk and things like that. It helps. I think it just helps it makes us better at what we do.
Oh, absolutely.
Yeah.
Yep.
So if I'm looking at insurance, what's the difference? What's better, a homeowner's umbrella policy versus a landlord policy? Where am I better suited for as an investor to use?
I would always opt for something that is specifically tailored for a real estate investment asset. You can find that in different ways, in different formats, right? There are always landlord specific policies. They're typically called dwelling fire policies.
Yeah.
Or a DP3. That's going to give you your most robust coverage, right?
Yeah.
Right out of the gate. And that's something that your insurance agent is going to be able to help you, traverse the different carrier markets and options that
Right.
exist out there. And so really looking at that and then combining it with and sitting down with your agent to run through the different endorsements that are available. It's a good comprehensive policy right out of the box. But that is the trap that I think a lot of people run into. If you're an accidental landlord, which accounts for most real estate investors in the country, they kind of fall into it, right? They have their first home or their first condo. Maybe the family's growing, they need to work, they need to leave. Maybe they've got an incredible interest rate that they can't let go of.
They can rent it and get a good income.
Yeah. And so they leave the homeowner's insurance on there, right? Or they just get another homeowner's insurance policy, but they're not specific enough about what's actually happening inside of that asset. And the last thing that you want to have happen is to be paying premiums into a property, ultimately have a claim of some kind, and then adjuster comes out and they say, hey, wait, where's the owner? Right? This is a homeowner's policy. And, Joe or Jane Smith opens up the door and says, no, I've been renting here for the last 18 months. I don't know.
It happens.
Let me call Matt and get him on the phone.
And my answer would be like, I don't know.
Yeah. You're my insurance carrier. I had a claim. I filed a claim. You don't want to run into that situation. I think it's, again, one of those unintended consequences. I don't think people do it on purpose.
No, they don't. No.
Landlord coverage is pretty price comparable to it. But the last thing you want to have happen is ultimately get a claim denied because you didn't have the right coverage in place. And so that's something that your agent can work through with you. And then, I always recommend combining that with an umbrella policy, right? You can go out and get an umbrella that'll cover your personal home, your auto, as well as your rental properties, right? You want to create that extra barrier of protection, and a couple, $1, $2, $3 million in umbrella coverage, really a couple $100 a year, right? That is a peace of mind that I think as the country has unfortunately gotten more litigious, Florida.
Well, Florida is a very litigious state. I mean, probably the most litigious.
It is. I mean, 80, I think it's the stat now is 80% of insurance litigation across the country comes from the state of Florida. And if that's,
we're number one.
If that's not a stat that unfortunately, slaps you in the face, and it's like cold water splashing you there, it's like, wow, 80%. Right. And the legislature is doing a good job to try and curb some of that opportunistic litigation.
Yeah.
But it's a good thing, right? I mean, you're dealing with tenants. Tenants have friends that come over onto the property. You're not there, right?
Yeah.
Like you would be if it was your own home that you were living in on a day-to-day basis. So that's always the thought process to go through with your agent.
So someone comes to Obie, can you bind them instantly? The binding part, you get them like, hey, I have the coverage, I can close. How quickly can you do that? Is it instantaneous? As soon as, hey, here's my check, we're good to go?
Yeah, and it's instantaneous. We've had clients go through in as quick as 93 seconds, right? We had a client, brand new build.
That's amazing.
Brand new build, not on the coast, not in a, I think it was in Ohio. So a very safe place, smaller home, reasonable reconstruction costs, brand new build. They got through and they got a quote instantly. They liked it. They bound it. We sync directly with your loan originator typically. And so we can get that part of the closing process checked off for you immediately. We wanted to make it instant. My frustration from my previous life was that I would request a quote, my agent would go out, and then everybody waits.
Yeah.
Which of these carriers are actually going to get back to me, right?
Yeah, we kind of talked about that earlier. Yeah, like having to go quote everything. Yeah.
So we wanted to be very clear that if your agent comes through, or you come through directly, or you get passed on by your lender, you're going to know at the end of our quoting process whether or not we're going to offer you a quote. And the price you see is the price you get. There's no underwriter to argue with. We wanted to make it really clear and transparent for people, which means that I'm not going to bind everything, right? We might not be able to offer it to everybody. The price might not always be great for everybody, but I can guarantee a really quick decision for folks to at least be able to move forward with Obie, or to be able to quickly say, hey, you know what? Unfortunately, Obie's out. Let's go to Travelers now. Let's go to State Farm. Let's go to Allstate.
Let's go to others
and see what that looks like.
So you mentioned the lender, the mortgage, or the originator. So do they connect into your system that they can? How's that work?
We connect. Yeah, great question. We connect directly into theirs. So if they're a loan partner, we cover most of the large single-family rental lenders across the country. We will connect directly into their system in a myriad of different ways. But our value is really that we hard code those lender requirements directly in our system. So depending on the lender that you have and their loan requirements, we wanted to figure out a way of aligning everybody's incentives and interests there. So that way, when you get to the insurance part of your loan closing requirements, when you come and get a quote from Obie directly through Kiavi, Corvest, Lima One Capital, whoever it might be, when you come directly from them, we're going to pull over your loan number. We're going to pull over the mortgagee clause. We're going to pull over the requirements. So as we talked about before, if they don't allow less than $1 million in general liability limits on your policy, we're not going to offer you or even show you the $500,000.
Right.
Option,
you're going to show them the correct amount.
Yeah. I don't want you to get it wrong. And we let people know and say, hey, listen, you don't see this because the lender that you chose doesn't allow this. So this isn't an Obie thing. You go to any one of our friends in the space, right? They'll be able to offer 500,000 or other limits that might exist there, but your lender is going to come back and say, hey, listen, you really need to change this. And again, you don't want that change to come down the pipe at 3:00 on a Friday.
So right there, you have a competitive advantage over others at this point. Yeah, over maybe a traditional insurance agent or broker in that respect, because you are linked into these lenders or these originators, and you have all the information. You know what their requirements are for insurance on the properties that they're going to lend on. So that saves obviously a lot of time, a lot of effort, a lot of brain damage, as I like to call it, and I guess really angst or anxiety for the buyer and then everyone else down the line, because the buyer's like saying, oh my God, what's my policy going to be? What's my policy? And here it is. Hey, according to what the parameters are from your lender, this is what we can offer you. as a policy. So that's, look, this is definitely, I don't know if it's groundbreaking, but it's definitely, to me, it's groundbreaking in that respect. Or I don't know if others are doing this, but then again, you're the first person I've ever talked to about this and what you guys do. I mean, other than the traditional the traditional insurance brokers that,
Sure.
which based on experience, they're not connected into the lender directly because they're talking. I can see the emails going back and forth all the time between the lender, the underwriter, the insurance underwriter. So obviously you by doing this, you streamlined the whole communication process too.
Ideally, yeah. Nobody likes dealing with insurance, right? I don't even like doing my insurance on an annual basis.
I'll tell you the truth, I don't either.
So if we can make that experience a little less painful, right, and a little less of a headache, right? Nobody likes that insurance part. It's a great feeling to close on the mortgage, right? It's a great feeling to get that deed. It's a great feeling when you've gotten to the end of that journey and now you've taken possession of that investment asset. And now, the second part of your journey begins. But nobody's looking forward to that insurance process. And so how can we make that just a little bit less painful, just a little bit more enjoyable? And if we can streamline all of those parties, even with the insurance agent, we do a significant amount of work educating and supporting the independent agent community that exists out there, because a lot of them don't do a ton of investment property insurance sales, right? It comes up opportunistically. Somebody, you do their home and auto, and now they've bought a rental property, or maybe they have a second home or something. And so making sure that they're also really cognizant that your traditional lender process that you might have with your regular homeowner's lender might differ a little bit than your investment property lender. So the things that they can watch out for, the things that they need to know to ask for during that process, because at the end of the day, they don't want to waste time either, right? The fewer of those back and forth emails that they have to be involved in, the better.
Oh, 100%, yeah.
And so,
I mean, just me personally, the less emails I get, the better.
Oh, you and me both.
Yeah. So yeah, it's like you said, it's like speed, transparency, and actually convenience at the same time. There's a convenience factor.
Sure.
Should be overlooked because people look, like you said, we're in a time now where everything is, people want instant, and I see it now more and more, at least on the transaction side. Hey, what's going on? I need to answer now. And before it was like, well, just sit, sit down, shut up, and wait. Basically, was the old mantra, and you waited and you waited. But now, look, I think because of technology and just how we've become, our brains have now been rewired in such a way that doesn't work anymore. We want that answers quicker.
Yep.
And
we
want to be able to either move on from the deal or close the deal as soon as possible. What are some of the as an investor, when they're getting the insurance, that's something that they're missing or they're not paying attention to on the insurance side?
Yeah, I would say the biggest thing as of recent that I encourage folks to look at, one is always water backup, right? There's always a myriad of different endorsements. And there's always a myriad of different endorsements, right, that you can potentially add on there. Water backup's a big one. I would say the other thing too that's becoming more prevalent is something called ordinance and law, right?
Okay,
ordinance and law coverage. That effectively means that if you have some type of loss at your property, right? Like let's say the absolute worst, God forbid, happens, property burns down. Well, there were things inside of that property that were grandfathered inside of your local town, your county, your state, ordinances and laws. And so now you actually need to rebuild the property, but it needs to be rebuilt up to code today. And so ordinance and law coverage will provide you effectively that delta, right? Maybe the way that you're connecting to city water is in a certain type of pipe, right? That now actually needs to be upgraded into something else. Any of those types of unforeseen increases in replacement costs that you otherwise wouldn't have been able to have, or you wouldn't have originally had because the house was built 50 years ago and this wasn't a requirement at the time. Whether that's electrical, plumbing, the fuses or circuits that you might have in your property, the way that the Florida has a bunch of construction requirements now around mitigating hurricane risk. So that's a big one that also can be very affordable. And the third one, and is probably most important, is to really revisit that replacement cost, that property limit on an annual basis. And the reason I say that is it's sometimes called the property limit, sometimes it's called coverage A, sometimes it's called the replacement cost, right? That is the amount that it's going to take in order to rebuild your property. And the biggest mistake that we see here at Obie, when folks come to us or really just in the market is they got a limit on their asset. Maybe they 150,000, maybe 200,000 when they bought the property, but they might
Okay.
have bought the property, Matt, 10 years ago
Yeah.
when you could rebuild that property at $80 a square foot. Right? There is nowhere in the United States that you're going to be able to rebuild your asset for less than $120 a square foot. Right?
Yeah.
Certainly not in Florida.
No,
And
Florida,
so
you double that easily.
yeah.
200, 250.
Absolutely.
Yeah.
And so the problem is that we see, again, sometimes the worst happening. Somebody's house burns down, the entire thing gets destroyed in a hurricane, whatever that is. And they're only able to effectively rebuild half their home, right? Because they never increased that limit and they never just kind of rechecked it. And your agent's going to take an indication from you. Many of them hopefully will kind of do that mental math, right? They'll say, hey, all right, it's 1,500 square feet, X amount in building limit. Well, that seems pretty low. We should increase it.
Yeah.
But you want to do that diligence yourself. It's going to show up on the declarations page and really on the first page of your insurance document, right? What is that property value and how much is that per square foot? That's the biggest thing. And the reason I also say that, and we've seen this happen, is when you have a lender, as most properties do, they're going to look at that when that might happen. And they're going to say, hey, listen, you didn't cover this for enough. I want my proportional amount of that check. And then I'm out of here, right? There's not enough to rebuild this asset. The
Yeah.
lender just wants their portion, right? Their interest covered. And then they walk away. They get
True.
their check in the mail. And so you're left with potentially a burned out building or a blown over building and a piece of land and maybe a 10, 20, 30, $40,000 check. What are you going to do with that?
Not
Right.
much.
And that's the tragedy, right? So always make sure that if you're paying for insurance, make sure you've got enough of it to actually make it worthwhile.
Yeah. We just talked about, like we just talked about the agent reviewing the policies like on a yearly basis, like the replacement cost. So that, again, I think this goes back to earlier what we talked about, having the right agent, broker on your side who knows what they're doing. I think that goes back to also who your relationship is with. You find the right people. I mean, a lot of times, look, in this business, and I mean, in real estate, on the sales, like as a broker and agents, like half the time we don't, not that but there's a lot that don't care who the broker, who the insurance guy. Yes, get it from Joe Schmo Insurance and whatever. See you later. Yes, get it. Just find it. But I think this is where we come in as advisors saying, hey, here's the right person to talk to. This is a person who's going to be with you for the rest of the time, hopefully the rest of your life or whatever it is, the rest of the time you own the property or buy other properties, that's the person you want to be associated with. And, I had that person for a long time, but, in the last few months, he decided to leave the business because he got tired of the business. So, he got burnt, he was like, I want to do something different now. He's still in insurance, but he's in a completely different. He's now working in the classic supercar space with Haggerty. So he's now working with them. Now that's his true passion. He was happy about that, but he did it for a long time. I'm like, you're being very unfair to me. He goes, why? He says, who am I going to turn to? Who can I trust? He goes, don't worry, I'll get you someone. I'll refer you to the next person, but they give you someone good to work with. But this is everything in our business is relationship based a lot, and having relationships with everyone from top to bottom, really, and having the people that our clients will keep on calling and say, hey, who do you advise us to use? Who's the person? Who's the person you trust? Again, you're building trust. You're building trust with your clients, your customers down the road. And like you said, the review of the policy is something that on a yearly basis, and that's what he would do with me. He would do that with me. He would do with everyone I referred him to. And that's what you just brought up. It's like, I hope whoever's listening to this or watching this today, keep that in mind. Or if your agent hasn't brought that up to you in the last few years, every time you renew, bring it up to them. Talk to them about it. This is something, like you just said, the replacement cost is something that people severely underestimate. And I like that you brought that up, because that's really something that people, I don't think, really think too long and hard about, or they just kind of brush it off. They're like, whatever, it's like, they'll really build my house. No, they're not. They're not going to rebuild your house, unfortunately. So the coverages, things like that, any other coverages that investors should be having, or when you're selling them the policies that they should have or consider?
Those are the 2 or 3 biggest areas I think that are most important. I would say the last thing especially for your listeners in Florida and especially in South Florida.
Yeah.
How can you control the controllables, right? You're not going to be able to control
Mm,
the hurricane coming through and having an impact. You're not going to be able to
right.
control potentially that tree falling on the house or something else
Just
happening.
happens.
So
Yeah.
as a real estate investor, you have tenants in your asset, and they're never going to care about the property as much
Right.
as you do,
True.
right?
Very true.
They're just not. And so
Right.
what are the things that you can do? I would say that the two biggest causes of loss outside of weather related things, especially in Florida, are going to be water loss, and are going to be fire. Right. And so what we used to do, what I encourage everybody to do, make sure that your tenant knows where they can turn the water off. Right.
Yeah. That's
If
good. That's good advice. Yeah. I
you know,
didn't think of that. That's good advice.
if you think about the kind of the renting demographic, sometimes, especially younger folks coming out of school or in their 20s, they've never turned the water off, right? Before they've never had to. And so as the toilet's overflowing, the sink's
Oh
overflowing,
God.
whatever that is,
Oh.
when you're doing that first walkthrough with them,
Yeah.
you show them how to turn it off.
You know what? You just brought that up. Now I got it's just thinking in my head, like, do I know where my water shutoff is for my house? I'm like,
that's number one. Number
Yeah.
two, most real estate investors, I think also the city requires that there's a fire extinguisher, right? Most people
Yes.
put it under the sink inside the kitchen.
Yes.
Plenty of people that have never used a fire extinguisher, right? They saw it in the third grade when the fire department came to their elementary school, but very fortunately for them, they've never used it. Right. And so show them where it is, show them what to do. Tell them that, listen, the small things, right? I think of myself sometimes as a real estate investor myself. I am effectively Smokey the Bear, right? I am the person that as we're walking through, you see a fire starting, like a grease fire inside of your oven. The moment you open that thing up, you've given it oxygen, right?
Yeah.
Here's your thing of baking soda. Here's the fire extinguisher right next to it. Don't just run out of the property. We give all of our tenants something called fire blankets.
They're, my wife just bought a few of them for the house.
It's great, right? You're scrambling to find something, open it up, rip it open, throw it on there.
Yep.
The other thing too that I'll leave you with, we're not affiliated with them in any way, but I'm a big fan. There's something called fire stops. Fire stops are basically they're like a hockey puck, magnetic hockey puck. It goes
I see
underneath
those.
it goes underneath the microwave or underneath the hood over top of your stove. In the event that there's a fire on your stove, which is the number one cause of kitchen fires, if it gets hot enough and it senses fire, it will disperse a powder.
It's a suppressor. Right? It's a fire suppressor. Yeah.
It's great, right?
Yeah.
I mean, that is the number one cause of kitchen fires, first floor, and even total losses sometimes are really going to originate from the kitchen. And this device is great. I think you can get 2 for $20. It's good for 10 years, right? 7 years, whatever it might be. Check the box. But we're a big fan. They are things that we've given out to clients, we've given out to property managers. Listen, at the end of the day, since you are not there and tenants can always be very unpredictable, give yourself every opportunity to not have to file a claim if you don't need to, especially 100%. In the Florida market, right? Wait for that hurricane to come through, wait for that flood that you can't mitigate yourselves. Use it then, but don't utilize it in a way that's just going to continue to drive your cost up, right? Mitigate and control the controllables.
Gotcha. So just to wrap everything up, Obie, are you considered a startup at this point, or are you further along?
Yeah, I would say we're a little further along. We were certainly a startup chugging along, but we've grown now. We're covering several billions in property value across the country. So
amazing.
We've grown. I think we'll probably cover tens of thousands, if not, well over 100,000 in single family rentals across the country. So it's been quite the journey.
Are you still raising money from VCs, or are you at this point, living off of what you have?
Yeah, I mean, we don't need to anymore. Fortunately, we were a venture-backed company. We used venture capital to get to where we're at today.
Great.
We've had really great partners with that, but we're on a journey at this point where, if we don't need to raise additional capital, insurance can be a vehicle that's when done correctly, we can drive really good, affordable premiums and also continue to fund the operations of the business.
So how many employees, just out of curiosity, do you guys have, or are you?
Yeah, we're about 130, 140 employees now at this point across the country.
Across the country, okay. Your headquarters are Chicago, you mentioned to me earlier, and Sarasota are the two?
Yeah, correct.
Very nice. All right, so who's the ideal customer client for Obie, just to wrap it up? Who do you need to be in touch with, plugged into at the end of the day?
Yeah, our ideal client are small to medium size residential real estate investors, and really that 1 to 4 unit single family rental category, townhomes, condos. That's our
duplexes.
Yeah, fourplex, duplex. That's our sweet spot. That's what we know and love, and that's what we spend a majority of our time doing. We do some apartment business as well in the larger hab space, but especially in the Florida and South Florida market, that 1 to 4 unit property is really our sweet spot.
That's funny. As you mentioned, I'm looking at my flyer for a fourplex that I have for sale in Miami, as you said that. So that's a good way to end that. How do we find you? How do people get in touch with you, Aaron? How do we find you?
Best way is obieinsurance.com, obieinsurance.com, or your listeners can email me directly. It's aaron@obieinsurance.com.
Very easy. And I obviously can find you on the social medias and on other ways.
Oh yeah. Yep.
All right, perfect. Aaron, hey, it was a pleasure meeting you and talking with you today about a very important topic that we all deal with, not just in South Florida. I mean, it's a huge topic for us in Florida in general, but around the country, I know it's getting tougher and the space is getting tougher. And I like what you guys are doing as far as delivering a product that that people can get into, understand the numbers rather quickly, help them in their investment choices and decisions, and also provide good insurance for them as well if they end up buying and they need insurance for their properties. Definitely keep you in mind, and I'm gonna, any insurance brokers I know down here that are looking for good carriers or good hookups, I will definitely send them your way.
Sounds good. Thanks so much, Matt.
Aaron, have a great weekend. Thank you for coming on with me. I appreciate it.
That's it for today's episode of the Krinzman Property Playbook. I hope you've gained some valuable insights and feel inspired to take your next steps in the real estate game. If you're ready to make a move or need expert guidance, let's connect. Whether you're buying, selling, or looking to invest, I'm here to help you navigate the South Florida market with confidence. You can reach out to me directly through my website or on social media. Let's get the conversation started and make your real estate goals a reality. Thanks for tuning in, and I'll see you next time on the Krinzman Property Playbook.